Bitcoin has just shattered its previous all-time high, soaring past $123,000. This surge is being fueled by strong ETF inflows and renewed legislative interest in cryptocurrency regulation. Here's a detailed breakdown of today's remarkable event and its implications. Looking ahead, the immediate focus will be on whether Bitcoin can maintain its position above the breakout level of $120,000. This milestone is significant as it marks a psychological barrier for traders and investors alike. Analysts are closely monitoring ETF demand, particularly following recent approvals for Bitcoin exchange-traded funds, to determine if this interest remains strong enough to support sustained price increases. The introduction of ETFs has historically led to increased liquidity and accessibility, thus driving up demand. Additionally, as legislative debates continue in the House, the outcomes could significantly shape market expectations regarding exchange rules, stablecoins, and overall market structure. Proposed regulations could either bolster investor confidence or create barriers that stifle growth. Experts suggest that if Bitcoin can hold its gains over the next week, it could pave the way for further bullish momentum, attracting institutional investors seeking to capitalize on upward trends. Conversely, a failure to maintain these levels could lead to a sharp correction as traders realize profits and seek safer investments. The recent volatility underscores the importance of market sentiment, which can shift rapidly based on news and regulatory developments. Investors should pay close attention to upcoming announcements from lawmakers and major investment firms, as these could provide critical insights into the future trajectory of Bitcoin and the broader cryptocurrency market. The current landscape raises essential questions about the sustainability of this rally. Are we witnessing the dawn of a new era for Bitcoin, or is this a fleeting moment of market exuberance? As we approach the end of the month, the next few days will be crucial in determining Bitcoin's fate, setting the stage for either continued growth or a return to more cautious trading strategies. The path leading to Bitcoin's new all-time high has been shaped by several key factors over the past few months. Recently, the cryptocurrency market has witnessed an unprecedented surge, largely influenced by legislative actions in the United States. Lawmakers have engaged in discussions on multiple crypto bills aimed at establishing clearer guidelines for digital assets. This Crypto Week on Capitol Hill marks a significant turning point as it creates a more conducive environment for institutional investors who have historically been cautious about entering the market. The increasing interest in cryptocurrencies has been a consistent trend, but the recent regulatory focus adds a layer of legitimacy that many believe is crucial for the future of digital assets. Companies like Pantera Capital have reported a marked uptick in interest, with institutional players eager to build their crypto holdings. This shift not only boosts demand for Bitcoin, but also instills confidence in retail investors who may have hesitated in the past. Historically, similar situations have seen Bitcoin rallying only to face declines due to regulatory fears or market corrections. However, the current climate appears markedly different. Investors are increasingly viewing Bitcoin as a legitimate asset class, particularly in light of evolving regulations that provide a clearer framework for engagement. Looking ahead, the implications of this regulatory clarity could be profound. As more institutional investors enter the market, the demand for Bitcoin may continue to rise, potentially leading to further price increases. Analysts suggest that if the current trend persists, Bitcoin could solidify its position not just as a speculative asset, but as a cornerstone of diversified investment portfolios. The upcoming months will be crucial in determining whether this momentum can be sustained, as both regulatory developments and market sentiment continue to evolve. Bitcoin has recently surged to a new all-time high, a development that carries significant implications for both the cryptocurrency market and the broader financial landscape. This price surge is not merely a fleeting moment. It reflects a growing wave of institutional interest in digital assets. Over the past few weeks, Bitcoin exchange-traded funds, ETFs, have seen inflows exceeding $5 billion. This influx of capital indicates a strong belief among larger investors in Bitcoin's long-term potential, which can be attributed to factors such as inflation hedging and a desire for diversification in portfolios. Historically, Bitcoin has acted as a bellwether for the entire cryptocurrency ecosystem. When Bitcoin experiences price increases, it often leads to a ripple effect, enhancing the sentiment for other major cryptocurrencies like Ether, XRP, and Solana. The recent bullish trend has the potential to increase trading volumes across the board as investors look to capitalize on the momentum. This can create a positive feedback loop, attracting new participants to the market and further driving prices higher. However, this rapid rise is not without its risks. The cryptocurrency market is notoriously volatile, and such swift price increases often lead to profit-taking, which can trigger sharp pullbacks. For many everyday investors, this means that while the allure of high returns is strong, the associated risks are equally significant. The mainstream acceptance of cryptocurrencies is becoming more pronounced, influencing everything from investment strategies to retail market sentiment. This shift is underscored by recent endorsements from major financial institutions and the increasing presence of cryptocurrencies in traditional financial products. Looking ahead, the outlook for Bitcoin and the broader cryptocurrency market appears optimistic, but caution is warranted. Regulatory developments and macroeconomic factors could play pivotal roles in shaping future price movements. As institutional interest continues to grow, the potential for Bitcoin to establish itself as a legitimate asset class is increasing. Furthermore, as more financial instruments linked to cryptocurrencies emerge, the market could become more stable over time. Investors should stay informed and be prepared for both opportunities and challenges in this dynamic landscape. The upcoming months will be crucial in determining whether Bitcoin can maintain its upward trajectory and solidify its role in the global financial system. On May 28, 2026, Bitcoin reached a groundbreaking all-time high of $123,456 at approximately 10:45 AM UTC. This remarkable surge was primarily driven by substantial inflows into cryptocurrency exchange-traded funds, ETFs, and an increasing legislative focus on crypto regulation in the United States. Key figures in this event include U.S. lawmakers who are actively debating several crypto bills during what has been termed Crypto Week, a period marked by heightened discussions about the future of digital currencies in the financial landscape. The timing of this price movement is particularly striking, coming on the heels of a significant regulatory push aimed at creating a more structured environment for cryptocurrencies. The recent price surge is notable not just for its magnitude, but also for its context within a broader economic backdrop. With inflation rates rising globally, many investors are seeking alternatives to traditional fiat currencies. Bitcoin, often referred to as digital gold, is increasingly viewed as a hedge against inflation and currency devaluation. Institutional demand for Bitcoin has surged, with major corporations and investment firms eager to acquire the asset. This shift signals a growing recognition of Bitcoin's potential as a store of value rather than merely a speculative asset. The most shocking aspect of this event is the rapidity with which Bitcoin has rebounded from previous dips, climbing over $20,000 in less than a month. This contrasts sharply with earlier price surges, which were often followed by steep corrections. The current market dynamics suggest a shift in investor sentiment, as Bitcoin's market capitalization has exceeded $2.4 trillion, solidifying its position as the leading cryptocurrency. The implications of this surge extend beyond just market numbers. They reflect a growing acceptance of cryptocurrencies in mainstream finance. If these trends continue, Bitcoin could potentially reach even higher valuations, especially if regulatory clarity is established. The ongoing discussions among U.S. lawmakers could pave the way for more structured investment products, attracting even more institutional capital. As the cryptocurrency market evolves, we may witness further innovations designed to enhance investor confidence. With the current momentum, Bitcoin seems poised for a transformative period, potentially redefining its role in the global financial system as a legitimate financial asset in the years to come. As Bitcoin soars to new heights, will it maintain its momentum, or will we see a correction? Share your predictions in the comments below, and don't forget to subscribe for more in-depth analyses.